I posted this yet. Thank you. What's up, everybody? Oh man, I got so many fucking windows open. Wait a second. There we go. DraftKings, is it up? Oh yeah, 31 DraftKings. Back to the upper end of that range. What's up, Praveen Shank? What's shaking? I guess what we'll do is we'll shoot the shit. I'll go over some stuff, post some stuff we'll look at together, and then we'll wait on Apple, right? What are we gonna do? Apple's in like 10 minutes, 9 minutes. I'll leave a kind of squawk on. What the hell is this? Oh. I'll try to post some other earning stuff if you guys are interested. I don't know who's got what. Shit, what did I do? All right. You still don't know what Roku does? I mean, isn't Roku like similar to Fubo and all those other things? There's another one like Hulu and oh wait, oh, and now you're confusing me. It's a Roku TV. They make actual TVs. I thought it was like an app. Yeah, so like, isn't it like Fubo or no? Speaking of Fubo, I think they report today. Oh, he's joking. He's joking. I wasn't joking. I really didn't know what Roku does. Look at Fubo. Good God. Jeffries raises Moderna. Oh no, Jeffrey reiterates Moderna mRNA. Monster Beverage beat. There are a few interesting underbelly names out there. That Bill, Steve and I were just talking about. What? Oh no, Bill. Oh, Mr. Bill. My goodness. $50? Bill is at $54, is that right? Poor Bill. Wow. That's a bath. $50. You know, as many, you know, there's, I guess, a both on both sides. You got some nice winners, and then the losers are a disaster. There's another one. You know this one, WW.
5 minutes till Apple's earnings report. What we're looking for.
Oh, that's not bad. That's down a buck. I thought it was down more than that.
Revenue expected at 44.2 billion, and services expected 21.4 billion in revenue for the quarter. Also look for any color on the holiday season coming up.
Net looks like earnings per share and revenue beat. NET. It's lower net, so probably awful guidance. SWN is out. That's a little interesting spec name, this one. It's a slow mover though, really slow. Apple's out. Oh no, or was that just the guidance he just rattled off? How do we get, how come, that's the way it shows after hours? I thought it shows after hours with earnings, breaks, ideas on charts, trading, extended price line, orders, or, no, that's not it, right? Symbol, status line. FTNT was bad, really? So it's taking down the whole group, I'm sure. Indicators, high-low price. What the fuck? I guess that's the way Trading View shows after hours, just the price. Yeah, I guess that's the smart thing after hours. Let me see. Trading buy sell buttons. Yeah, that's definitely not it. Events. No. No. Hmm. Oh, maybe you gotta look at it on an intraday. All right, Apple, get with it already. MCHP in line, revenue miss. That's a semi. All right, we got a couple minutes to Apple. Might as well wait. I'll get a couple charts ready here just to look at. Today's Thursday already, right? PLTR, LT, I thought of you. I was like, give him a profitable quarter. There you go. Back to 18 again. Let's see. Yeah, these are all garbage names reported right now. Apple should be out in 2 minutes. CFLT. Where do I know that name from? CFLT. That's a growth name too, right? Yeah. This was a good stock back in the day, I remember. It qualifies for S&P 500 inclusion. Yeah. That was I was hearing people talking about that today on that PLPR. Wow, this is a shit show too, CFLT. Some of these growth underbellies, kind of a mixed bag. Well, you're going to start, that's what we're going to start seeing. You know, we're going to start seeing the good get treated nicely and the bad continue to look like a shithole each and every quarter. And that's what that's only the point I'm making is that, like, if PLTR, no matter how much you're in love with it,
Should see results from Apple shortly.
they gotta put quarters like this together and could be one of the few that ends up making it through this and being around again in the longer term, you know, where you see these names.
Apple reporting
Yeah.
headline $1.46 for Apple on 89.5 billion in revenue. It's a slight beat on the revenue line. $1.46 is a 7-cent beat for Apple. Expects to reach supply demand balance on iPhone 15 Pro and Pro Max models during the current quarter, says Apple. Mac sales to improve in the current quarter, says Tim Cook.
Tim Cook.
iPhone sales at 43.8 billion is a miss of 44.2 billion consensus expectation for Apple. Services at 22.3 billion beats a 21.4 billion consensus, so beating on services. Greater China at 15.1 billion for Apple compares to 17.3 billion expectations. So China weaker than expected. iPad revenue beat at 6.4 billion versus the 5.9 billion expected for Apple on iPad.
It sounds like a mixed bag out of Apple. And you get, you know, the conference call too, I'm sure. Will be the last say.
Shares of Apple volatile, heading a few points lower currently.
iPhone 15 and 15 Pro Max models are supply constraint. China Apple traders mentioned the revenue number not coming in as high as expected.
Like Medical SEM in the last minute, 41.67 billion in revenue, beating 1.59 billion consensus. Let's hear Echo Michael.
China end of the business week. So, whoa, what is that? 176? That's nothing. And you see the conference call. We'll have the last say. All right. What I'll do is, you know what I'll do? Instead of posting now and then anything additionally that we want to look at. All right, so kind of use this as a guideline this morning, and oop, I'm going the wrong direction, and breeze through it. I'll use it again because there are a couple things here.
Celsius CELH dancing through one stock split, Charlie. I go
Stock split? I don't believe it. CELH stock split. Unbelievable. All right. Let's talk about a few things here, and then I'll let you guys go. We'll go over some of the main stuff. All right. So here's kind of what went down here over the last couple of days, and pretty much was the main driver behind this snapback rally, right? So we were talking about how, you know, throughout this whole correction, right, throughout this whole correction in the market, the main component, right, especially of late, especially this downdraft here, has been the tightening of financial conditions, right? And more so this leg lower than anything else. If you remember, we were focusing on the Goldman Sachs Financial Condition Index. You know, some of the credit signals we look at align well with it, right? They're highly correlated. So going into a couple things here. You had the Fed, and we'll talk about that in a second. And you had, which is above my pay grade, I'm sure a lot of you, or some of you, follow it a lot more closely than I do. What was going on in the bond market, supply-wise, right? So some numbers came out in regards to supply, and some comments from Yellen kind of soothed bond market players in a sense where it took some of the concern away, right? The concern about too much supply and not enough liquidity. So that was first and foremost what happened before Powell. And you started to see what we started to see even before the market rallied were things like volatility and even more so the VVIX. Okay, so here the VIX, you had players. There was ongoing concern about a few things, right? Treasury markets. You had tighter financial conditions. You had a Middle East crisis, right? Spreading out to potential holy war and nuclear world war and all that shit. We all had bunkers warmed up just in case. So players come in, right? VIX starting from low levels. Players come in and start hedging that tail risk, right? Of something breaking in the financial plumbing of the markets because of tighter financial conditions, or potentially Iran getting involved in the Middle East war between Israelis and Palestine. A lot of balls in the air, and obviously that's why people look to hedge that risk, okay? And what we had was, once that Iran threat started to subside, once we got some more information from the Treasury market and Yellen, you had some of these hedges start to be unwound, right? At least the slowdown of putting on these hedges, we started to see a slowdown in putting on these hedges. Then you had Powell yesterday, right? And my opinion, what I think, he was a little more dovish than he could have been, and a lot of people were afraid he would be, right? They thought that, if you remember the last time he spoke, Powell made a mention about financial conditions and had said, I may be rewording this a little bit, that financial conditions he didn't feel weren't really that tight, okay? And that's when the market started to raise rates, and we started to see financial conditions tighten even further. Because obviously if Powell don't think they're tight, he thinks they can tighten some more, the market's going to do it for him, right? And again, if you remember the conversations we had, everybody was all caught up on whether the Fed was going to raise 25 bips this meeting, and financial conditions in the market already raised 25 bips, right? 75, 80 bips in total already for them, okay? So that's had a huge impact, or has been a huge burden on equities and all risk assets. So yesterday, the main takeaway for me, I guess others could probably have different takeaways, but the main takeaway for me was the comment he made about both financial conditions and credit conditions, okay? And the way he portrayed it was that he felt financial conditions did all the work for them, that the Fed now is just as concerned about the other side as they are inflation, meaning they're just as concerned of over tightening than they are of inflation not heading lower, okay? So if that is the interpretation that the market takes away from yesterday's speech, just the opposite of what it was the speech prior, the market is going to loosen financial conditions. Right? If he feels they've really tightened up and they've tightened up enough, the market will start to loosen financial conditions on its own. Okay? And that's kind of what we've seen take place yesterday, post-Powell press conference, and carried over into today. So you had a combination of a lot of these tail risk hedges that were being put on to protect against a worst case scenario out of three fronts. That subsiding and people starting to take off those hedges, okay, them being unwound, and financial conditions loosening up from where they were, okay? The combination of that, makes a VVIX looks like this, right? Over the past few days, here you go. Whoop. A VIX looks like this, right? And even this, which is a measure of tail risk hedging, pretty much giving back the whole entire thing that it put on recently, right? Whoop, whoop, right back, okay? For me, okay, based on other stuff I'm seeing, and I'm sure, everybody's looking at their own thing, right? For me, I'm looking at the sweeper activity, I'm looking at this stuff, and positioning. For me, this has been the primary driver behind the equity rally. Now, why do I say that? I say that, one, first and foremost, in regards to the sweeper activity and the flow, that the buying from there was not a driver, okay? And I'll give you, I think, what says it all. I haven't traded a thing all week. Now, granted, I came into this week, last week, this week is the heart of earnings season, right? We talk about that all the time. This is an extremely noisy week. You got a lot of risk out there, the Fed, everything I just spoke about, right? On top of everything going on in the world. It's just an extremely noisy week, right? A lot of times they'll make for at least some volatility, some sharp moves, and a lot of times stuff that just doesn't make sense, okay? So coming into this week, I didn't have my hopes up on seeing stuff that I would get excited about, let alone trade off of, okay? And that's usually almost every earnings season around this time. Now, if you guys remember, I made the point the last 2 weeks on this webinar, as we get into next week, that's when things really start to clear up on these signals, right? As far as flow is concerned, as far as everything. Because what happens, even though there's still names a good amount of names that still have to report their earnings, the high beta names, right? The heavily weighted and mostly watched names are pretty much done, right? Now that Apple's in the rearview mirror, even though there may be some names, individual names under the hood that it still need to report, that risk of any other name like an Apple weighing on the whole market and everything else, the odds of that have come down significantly, right? So once you move past this heart of earnings season, that's when you start to see if players have an appetite for some stock picking in individual names. You start seeing sweeper activity in certain pockets and sectors, right? Regardless of what the indexes may be doing, up, down, sideways, crooked. They start to go to work, right? They start looking at post earnings, names that have reported, maybe sold off, or whatever the case may be, right? So going into next week, each and every day from that point, the sky's clear and things will get a lot clearer for us as far as these signals are concerned. This week is one of the noisiest weeks, okay? So the point I'm making is, even as a long-only player, right? I didn't participate. I don't participate on the short side at all, okay? And one of the reasons are I'm leaning long, right? I'm looking for those long opportunities. That's why I'm not shorting. The flow behind this move has really been disappointing, right? And not to say that we would have seen aggressive accumulation in a handful or a bucket of names because the market rallied, right? But a lot of times you will see even aggressive action, shorter dated action playing off the move, right? Momentum players. Now again, the week, just being this week and what was involved could have a lot to do with it, but it just wasn't there, right? And like you see, where the market was strong throughout the day, a lot of times you'll see just sweepers in Apple, AMD, post earnings and stuff like that. We were seeing just names that are set to report earnings, just catching call and put action, like not even acknowledging what the market was doing, okay? So the point of why I'm telling you this, that when I see stuff like that, okay, what it tells me, what it shows me is that buyers, okay, new fresh buyers are not the primary driving force behind this rally. Okay, and it's more of short covering, it's more of hedges being unwound and stuff like that. And when you do the good thing about these type of rallies is that they happen so violently and so quick. Well, it's good and bad. But when hedges get unwound, when the VIX unwinds, and that leads to upside in equities, you get moves like we saw this week, right? Bing, bing, bing. 2-3 days of just up, and go, right? So now what's likely to happen, okay? And today, by the way, we were talking about it yesterday, and I still couldn't get my hands on anything. Yesterday, post-Fed, we started to see primarily the mega caps and the high beta names get attention, right? That's where the outperformance was. The Qs were outperforming. That's where the best momentum and the strongest price action was. So we were talking yesterday that if this rally will continue, what will likely happen is we'll start to see it trickle down into stuff like the small caps, right? Which was, I think, flat yesterday. The equal weight S&P 500, which was flat yesterday, right? So these things didn't participate much at all the past 2 days. And today, that money overflowed, right? That squeeze overflowed and trickled into a lot of this stuff. A lot of names like the banks, right? That nobody's had an interest in at all. They were strong today, right? Even the major banks were strong today. So all these groups that have been ignored, the Boeings of the world, right? The Home Depots of the world, okay? Now, what we first and foremost have to understand is that as much as we were oohing and ahhing about basically almost 2 months of these things not catching a bid, this was overdue, right? A lot of these names were significantly oversold, right? So it's bound to happen at some point. And it really doesn't change anything big picture when it does happen, right? Because nothing goes down in a straight line. So what this rally, what I'm getting at is this rally doesn't tell us much of anything besides the tail risk and all these hedges being unwound. That's all it tells us, okay? Now the test for bulls, if you want to see if this rally has real teeth to it, or maybe the start of something even more special than that, when this market gets tested, right? This market's not just going to go up every single day. There's going to be a headline, news, a job number tomorrow that disappoints, where we're going to see sellers, okay? And into that selling, we're going to see whether buyers still have an appetite to keep this bullish momentum going, or if they've exhausted themselves and would probably lead to some chop, if not a little corrective a few days here. Okay, so that's kind of what we're looking at now. If you've missed this squeeze, we were talking about this in the room. For a lot of you who aren't as active, aren't as quick, these moves almost don't do you any good, right? Yaya in the room, one of the members in the room, I think kind of played it the only way I would play it for a possible swing trade. He kind of put on some, I think it was S&P 500 exposure, bought some TLT, right? Because the flow in the names really didn't give us any ideas. And he was a bit early. He was underwater for a couple of days, but the squeeze bailed him out. Okay, and knowing that what we know now, that the squeeze was so violent, so strong, it was obviously worth taking a shot into that. Well, just off short-term sentiment being bullish, amongst other things, right? Breath being so washed out, etc. But again, if you're concerned about something bigger, larger at play than just an unwind of shorts and an unwind of hedges, okay, you're nowhere close to missing the boat, right? You will see if, for example, those of you who think we are still in a bull market, right, and this is the continuation or the start of a potential bull market, it's not over here, right? even on down to flat days, we're going to see a ton of aggressive buying come in. All right? And yeah, I'm not saying it will or it won't. I can't predict the future. If the sweeper activity of now is any clue about the future, then we're up Schitt's Creek. Okay? But if this is the start of something larger than just a short unwind, okay, we will see buyers step into any little weakness they can. And even if the index is stalled for a period of time, there will be buying in several names and sectors across the board. Okay, especially as we get into next week and beyond. But these are important clues to pay attention to, right? Extremely important. So the sweeper activity, and I start here because the sweeper activity tells me a lot of what I need to know about whether this is something real or this is just a squeeze. All right. So the way I like to usually play this quote unquote just a squeeze is a lot of times I just buy like TNA or TQQQ in the morning or early in the day and try to hold that to take advantage of the move. Today it was kind of, a gap and go with the anti-VIX already cooked, kind of froze me up. And the lack of flow, not to guide me, I just didn't have anything to fire at. So there will be plenty of opportunities if this bullish phase will continue, but we'll see, right? And we were looking at this again in the webinars in the past, right? The late 2018 example. Again, I'm not saying this is late 2018. There's just been a lot of bidless names like we saw in late 2018, okay? This is something that you have to sit through, whether long or short, that honestly, I don't know how anybody could, okay? Right here. Here you had the drawdown, right, from the highs, okay, into basically the start of November. You had a rip like this. You know how many people thought this was the bottom and the start of a new bull run? Okay, then this happened. You know how many people thought this was going to be a break of new lows and a crash? And then this happened. Right? So not one, but you had two of these before finally you had the break. All right? So we can very easily, right, be in, it doesn't have to be identical, something like this that's going to screw up both sides at different points. And that's where, again, for me, having conviction in my signals and sweeper activity and what I'm talking about here allows me to feel comfortable about picking a spot where I think there's some real direction behind. I remember this period of time in late 2018, okay? This rally, I watched it go and couldn't find anything to get long because sweepers weren't buying anything. So this period here, sweeper activity provided some clues to say that regardless of what this is, maybe a squeeze, right? Maybe it's some a range here, a bullish with some bullish bias for the time being. But what it's not is it's not something larger than any of that stuff. That's what the sweeper activity was telling me back then. All right? That can change tomorrow or next week when things start to clear up. But up till now, right, the sweeper activity is telling me the same exact thing. That this is just an overdue relief rally and a lot of oversold stuff and a lot of shorts and hedges being unwound. Okay? Again, you guys may not agree with me on that, but what I'm convinced is we both don't have a clue. Okay? We both don't have a clue. And that's part of the problem for me. Okay? Without sweeper activity, if I'm not looking at the sweeper activity and trying to take clues away from that, how do I know, right? how do I know if this is not the start of some crash, or this rally is the start of a new leg higher, or this is a double bottom and a start of a new bull run, or this is not? Like, how am I going to decipher those things? You know, none of us can determine that. I don't care who you think you are, right? Because a lot of things more than likely have to fall into place. Here, what happened here was financial conditions and credit spreads and swaps had a bit of relief during this period, and then tightened aggressively one more time to force Powell to pivot. Okay, so what, you're going to predict that? You're going to predict the future? You can't predict that. It's something you got to be able to react to and have some sort of signals you have conviction in to confirm what you're seeing is real. That's basically it. All right. So the God's honest truth is that me personally, okay, without looking at anything, would not have a clue of whether this is a real bull move or just a squeeze, okay? But based off sweeper activity and what I've been seeing, right, and even price action, stuff like that, that all matters. To this point today, this has just been, again, whatever you want to call it, snapback sentiment squeeze or relief rally, oversold rally, whatever label you want to put on it, okay? And we'll see what transpires, especially as we get into next week and things clear up. So this is kind of how we were set up going into today. Now sentiment probably will be closer to the hotter side, right? Tactical sentiment, what we mean by that is short-term active trading sentiment. That got extremely bearish, right? We looked at a few of those indicators. They were sitting on bull signal for a couple of days, and the market still couldn't squeeze, okay? So they were really extremely bearish on a short-term basis. Even to the point where some of even the intermediate term sentiment indicators were starting to flash bullish, right? The BOVA, bull bear indicator, that went bullish. AAII, which updates today for kind of the week prior, that today flashed a bullish signal. So you had a lot of even more on an intermediate time frame start to line up bullish. That's how bearish things were getting on a tactical basis. So a squeeze like this definitely makes sense, right? Now, again, we've come a long way, and it's ridiculous, only 2-3 days, but because of the violence behind the move and the size of the move, now, and you can sense it around you, bears are getting shaken up, right? And the bulls, who felt like they were dead and buried, remember we were talking about have they capitulated yet? They got another ray of hope, right? They starting to believe again, based off just 3 days here. Okay, so tactical sentiment, if we're not on sell signal when the indicators update tonight, we're going to be pretty damn close to it. Systematic funds, right? This is more on the positioning side. CTA flows, those VIX control funds. They are in the neutral camp right now, okay? And they were against bulls in a sense, right? From the highs of the market all the way up until recently. So just to explain it in English so you guys understand, based off the rally earlier in the year, a lot of these systematic funds were fully loaded, okay? That with long exposure. They couldn't get any more long because they were already all in. Then the market starts to correct and they take down that long exposure, right? That by taking down that long exposure, that's supply that's hitting the market and going to weigh on equities. So that was a big reason for what we've been seeing in this bearish price action. The lower highs, lower lows, right? A lot of these funds just coming in, selling rallies, okay? Now down here, coming into this week, they're not a problem for the bulls anymore, okay? And as a matter of fact, they could be on the side of the bulls as we get into next week, because now they are actually net short, not a lot, but they are net short. And if the rally extends higher, right? So if there's more bullish momentum in the coming weeks, they will need to add long exposure back on, which will help. We'll see that in buying the dips, right? Short-lived pullbacks, where every dip seems like it's getting bought type thing. Okay, so we'll see as they update going into next week where they stand off this squeeze. This is a little bit of old information here, but you could see down here on this lower one from Goldman, okay, seeing an update. You see how much is there to buy if the market breaks certain levels to the upside. They got a lot of buying, a lot of exposure they're going to put back on that they took off. Where here now it's just kind of flat. Okay. Hedge funds in single names, right? We always like to keep tabs on what they're doing, even though this has been kind of a wonky signal of late. They are short, right? They were betting on a credit event, betting on something breaking. So they had flipped short and stayed short, added shorts recently. Last week, they added even some of the tech names for a change, right? Some of the big mega cap names, which were a hiding spot, but they started to short last week. They are probably part of the reason behind this squeeze, right? Them covering shorts into this bounce. And this is kind of the big picture signal here with financial conditions and credit default swaps. If you remember our last conversation, we were back at a level where if things continue to tighten, right, as far as financial conditions, or if credit default swaps widened out further, and that's the chart down here, okay, we were at where SIVB went bankrupt and the regional banks went through what they did. All right, that's back here. So you had to set up for Powell, and again, that's why a lot of us conspiracy theorists think this is right up on their screens, right? We'll argue the reason Powell sounded as dovish as he did yesterday, or not as hawkish as many thought he might sound like, is because you were at an area where the market has had trouble, right? Liquidity has been a problem when these things get to that zone. So he usually likes to soften the rhetoric, right? Come across as less hawkish, more dovish, allow financial conditions to loosen from there, and then when they get too loose, he can do the opposite, right? So that's their main tool for battling inflation, or, you know, trying to loosen the liquidity situation. Okay, what we want to keep an eye on is a couple things here, right? The most important thing is, as long as we don't see new highs, remember how we portrayed it, right? As long as we don't see new highs in credit default swaps here widening out, or financial conditions tightening even further, okay, there will be opportunities on the long side in the market, in equities, okay? May not mean the indexes rip roar to new highs, okay? Because, again, we're not making the argument we're in a bull market. But if these things are under control, you're going to start to see money find areas where they feel there's an opportunity. Maybe energy names, it may be underbelly growth names that have been bidless for 6 months. It may be, I don't know, housing stocks, right? Or banks that have been disappointed. The bottom line is we should see sweeper activity and constructive price action in forms of rotation and different things. All right, so the takeaway for us, if these are under control, is to look for those areas, especially on any pullbacks, as an opportunity. Okay, so that's the most important thing. We don't want to see these things tighten up again, Because as they tighten, that's a problem. You can't make money anywhere. All right? But even if they just chop around and hang around here, which will probably translate in the indexes chopping around, there will be rotation under the hood. And that's where the opportunity would be. Okay? If these things just rolled over completely, right? Rolled over completely to the lows and beyond, that would be indication that there's Fed intervention or Fed put at play, and that would mean risk on in the equity market as a whole. You probably see speculation. You probably see a strong risk appetite. Who knows? AI, the sequel, yeah, shit like that. Okay? But again, we don't see that happening. We don't see the Fed intervening in any fashion here. There's nothing broken that they have to inject liquidity into, right? It's just, I think they are concerned that if they remain as tight, something will break, and that concern now is equally weighted with them battling inflation. What ideally they want is to linger here. If the Fed can have their way, they want to remain range bound here, right? They want financial conditions not to ease aggressively until inflation is dead, and they don't want financial conditions to tighten up too much more than where they are now, because they're not looking to break anything, right? So ideally, they want to remain in this range. What they want and what the market allows is two different things, right? Because if something is breaking out there, if there's something in the midst of breaking, you're going to see these things start to rip higher again. All right? And looking like yields too, right? We've seen the same thing there. Oh, I have it up here, I think. Don't I have yields on here? All right, so they softened. Yeah, a lot of people getting excited out there, like yields are crashing, but look at the rip recently, right? So now they've softened. They don't have to continue falling. As long as they're not ripping new highs, there'll be opportunities in certain spots in equities. But, you get another rip like this going, and it may create a problem, right? Because it'll likely tighten financial conditions and affect the credit markets and weigh on risk assets, including equities. All right, so we just want to keep an eye on that. What else I got here? Sharpies, you guys are always interested to see what they're up to. I mean, more of the same, basically. All right, more of the same. They've been unwinding long exposure since the summer, late summer, I should say, right? And that trend has continued even up until last week. We get another update tomorrow. They basically unwound that whole long position. Okay? So they started, actually getting long, you could say probably the summer of last year, where they started accumulating through the October lows, then added over here post SIVB. And now they've washed out that post SIVB add and then some. So they're exactly at that zero mark. This is across the board in all index futures. Okay? They're not hedged aggressively like they were going into 2022. Okay? But there's a bearish trend here. And for me, I get a little concerned when a market goes into a correction and this crowd is not adding into that weakness. Right? Because that's what they love to do. They love to buy sell-offs where everybody else is bearish. They're notoriously known for that. They take off their hedges, okay? Their goal is to be somewhat hedged, okay? But they take off the hedges completely and add long exposure when a market pulls back and people are too bared up. Right? So the basic takeaway from this is that they feel that there's not enough bearish sentiment positioning out there to make up for the risk of taking off, of adding long exposure. That would be my takeaway. Even though this is kind of a neutral signal, basically. All right. What else we got? And yeah, seasonality. We talked about this last week. A lot of these things start to flip bullish, right? As we came into this week. Seasonality, you're going to hear more and more of that. Forget it. All the way up until Santa, even if the market starts cratering, okay? But seasonality, November is a really solid month, right? We talked about September, October. It's just a disaster, right? November is usually a pretty bullish month. And then you get into the Santa rally towards the end of the year, etc., right? There are reasons behind that. You get fund flows and all that shit that start perking up. What rubs me a little bit the wrong way is that there are a lot of people already talking about this. So what's likely to happen, you're going to have people start to position for that. And if we get a late 2018 type of market where it catches everybody on the long side and spits them out, that's something obviously wouldn't be too pleasurable for bulls. Okay, but I could definitely see a period here where even if the markets aren't ripping higher, we could be kind of like range bound, you want to call it, but with bullish momentum, right? Where sell-offs get bought, and stuff like that. As long as financial conditions remain in check, right? As long as credit default swaps, what we just looked at, remain in check, quiet, I think we can see that. All right, so that's a good thing. And I think we'll see that for like a good part of November. And depending on where things stand towards the end of November, we'll see if we got to worry about a wash catching bulls for Santa. And yeah, I spoke about this first and foremost. This has been the primary driver. And you see it, right? VIX starts selling off. Boom, you see program buys in the equity in S&P 500 and the Qs. All right, VIX would catch a little bid. That's when markets, right, chill out a little bit, retrace some. And then as soon as the VIX started to sell again, boom, more program buying. All right, so that's kind of where we stand. In a nutshell, here's the AAII weekly update. Okay, so you're back here at 24% bulls. That's a pretty low number. Like, look here. Now, again, we've had a 3-day rally, so this number is probably going to be higher next week. But you can see this is the lowest number in quite a while here. All right, here, rattle off September 27th, we were down at 27. Then 30, 40, 34, 29, and then boom, 24. All right. So that's the story. Anybody have any questions now that I've gone through that? Anybody curious about anything or have any questions on anything I've shown? Why can't I see what you're writing there, Eric? Oh, hold on. Looks so similar. Oh, you're talking about 2018, Eric? Is that what you were talking about? Listen, there are differences, but there are a lot of similarities in just the way the market's been acting and price action in a lot of the non-tech names. That's what has spooked me. You have no interest, the banks. Like, look, it's hard to, you had an update today. Great, that's fantastic. But, these banks look like complete garbage. Let me move this over there. Yeah, look at this. Like, and the regionals too. Like, you're gonna get excited about this. There could be more upside too, and it doesn't mean anything. The growth names, everybody's oohing and on over, and half those names have done well off earnings. The other half we've seen get obliterated. But you look at Shop, right? You're like, oh man, look at that move in Shop. You zoom back, look, like big deal, These things are dead, and that's my point. Like, these names, they're not the new leaders of a new bull market. It's not going to happen. It's not going to happen. You want to argue to me that this is a potential new leader of a bull market, a net? I'm fine with it. But that's one stock. That's one stock. That's one stock. So if we do start to see characteristics of a new risk-on bull market, the pure definition of a bull market, we're going to see new names, new setups, new flow, right? You're not going to be staring at just the Magnificent Seven every day. And I'll tell you what, I think if we're going to get out of this correction, no matter what, new bull market, a bullish phase, whatever it is, I'm telling you, you guys know what I feel about those crowded 7 names, and just in general. They're not going to be the names that lead us out. They're just not. They're not. And I'll tell you what, if they start off looking that way, if those are the names that are leading us in a rally, I'll be even more concerned. Now, it's not going to make me feel any better. It's going to make me even more suspect and more concerned. So what's the bottom line, right? Because again, there's a lot of information. Like, what's the approach? Because everybody, I think, and it depends on the crowd that's watching, but I think everybody just assumes that others trade and approach this game the same way you do, right? That couldn't be farther from the truth. Like, you see, like, even on the morning, on the broadcast in the morning, as aggressive as Lucci and Montero trade, Lucci's trading thousands of contracts a day, right? Not everybody trades like that. Not everybody trades like that, right? And like I told you guys, I'm getting trolled because I haven't traded in a few days. Like, what? I would get complimented on my discipline back in the day if I didn't trade in a correction. Right? And the crowd, thinking who they are, these young rock stars. You haven't bought anything in 3 days? Oh, piker. Right? When I say I'm long only, I don't short. That was the sign of a bottom right there, by the way. Right? When I got these jabronis on social media trying to troll me that I don't short, bragging how much money they make on a short, and they probably just got plastered, right? They just got effing plastered these past 3 days. I don't listen to the trolls. You know that. But no, the point I'm making, okay, is that I know a lot of you out there probably are more inclined to look for swing trades, right? Maybe you're not Warren Buffett investors, buy and tuck away, but you're not in front of the screen where you need to get out of something an hour later, otherwise you miss everything. Okay? So I know that there are enough of you out there. Believe it or not, just a few years ago, pre-COVID, there were more of you out there than the active traders. But since COVID and the government gave all the riffraff money to play Robinhood stocks, now there are more of those out there. But for those of you who are more on a swing trade or position side of things, right? What you need to try to do here, the bottom line is, try not to build up bias. Okay? Whether you're long, short, bullish, or bearish. That is the problem with this market. Okay? Whether you have a bullish thesis or a bearish thesis, you're probably wrong. You're probably wrong. Okay? And even if you're right over the longer term, you're going to be wrong many times over the shorter to intermediate term. That's the difficult part of this market. That's it. It's going to make bulls and bears feel wrong a lot because of the uncertainty out there, right? Like, just look around you. Recession, no recession, soft landing, hard landing, no landing, rates going higher, no, the Fed's going to cut rates, no, higher for longer. It's a menagerie out there, right? A menagerie. So the key, and it's hard, it's easier said than done. I promise you, it's easier said than done. It's not an easy thing to do. But the key for this type of market right now, if you're that type of trader, okay, is to try to avoid having a bias, right? Try to find opportunities to trade in front of you, and you let the market do the talking for you. In other words, let the market show you whether you need to be more bullish or not. And how would it show you? By exactly what I just mentioned, right? The healthier the market looks, the more stocks that are setting up, the more stocks that are catching sweeper activity, the more stocks that are finding follow through and breaking out, the higher the probability is that you're in a bull market. Okay? When you see thin breath and you're staring at the same 5 stocks and you're slapping yourself upside the head because you missed those stocks and there's nothing else to buy, that's not a healthy market. Okay? It may look bullish now or for the next few weeks or the next month, but it's not a healthy bull market. And if you're a swing trader, position trader, where you're going to pick up the money as a player of that caliber is in clean bull markets. Okay? In clean bull markets. Trending bull markets. That's where you're going to pick up the money. That's where you want to get aggressive. In these type of markets, where there's uncertainty and you see it in the price action, you see it in the lack of participation, we see it in the lack of flow, you want to tone it down, you try to play off extremes and react, right? Don't try to anticipate. Don't try to predict the future because it's an impossible task. Nobody knows how things shake out. That's the problem here. Nobody has a clue how things shake out. Even the market, which is the best forecasting mechanism on the face of the earth, is getting things wrong, right? The market was forecasting and pricing in rate cuts for the past year now. Even the market itself is getting things completely wrong because this is all unknown. Nobody knows how this is going to play out. Nobody. You know, it's a tough pill for us to swallow. We always want to be able to handicap shit and think we can figure things out. But just listen to the smartest minds out there, right? We talk about that all the time. Listen to a Drunken Miller and all these guys. They have longs, they have shorts, and they hope the longs outperform their shorts or the shorts outperform their longs. Okay? That's what they got to try to do here. Because they don't know. And even, you see when you ask a Drunken Miller, he's like, yeah, this is what I think, this is what I believe, but I could be completely dead wrong, and I have been. So, but the best advice I could give, and again, it's not going to make it any easier, is try to check your bias at the door, right? Don't build any thesis, don't build any long-term plan, and you just try to take advantage and react to what's in front of you. If you see the opportunities there. If you don't, you feel like you're chasing, you feel like you're late, there's no reason to force it. Because again, it's not a clean bull market. So you're not missing anything. I get asked the question, well, you don't get the itch to play when you don't play in a few games. Of course I do. You don't think I'm a degenerate? I take it out on the bowl games and I blow up my DraftKings account, like I told you guys. Right? I make my donations there. But for me, at this point where I am in, as long as I am in this game, it doesn't make sense to. Because when I'm just playing just to play and I have no conviction, it feels like I'm always just chasing break even. Ah, shit. All right, I'm down $5,000. Can I get even? It's always like that's my goal. And then when I get close to even, I'm excited. I'm like, what the fuck am I doing? Right? What am I doing? So yeah, that's just me, right? Earlier in my career, younger, when I was a young gun like most of you, yeah, of course. I roll the dice here, roll the dice there. As long as I'm not blowing myself up, no big deal. But I just choose to do that sort of thing elsewhere, Can you explain why sweeper activity indicates new buyers? Yeah, that's a good question, Alan. The reason why I have confidence that the sweeper activity will indicate new buyers coming in is because when you understand what the makeup of flow is, right? When there's a healthy risk appetite out there, right? When there are things to be bullish about, or there's an abundance of liquidity out there because of what the Fed has done, whatever the reason is, okay? Throughout my career, I've always seen that in the flow in aggressive call buying, which is sweeper activity, okay? So I'll give you an example. If somebody's excited about a DraftKings, and they were coming out of COVID, right? That was one of the hot stocks back then. We won't see just one sweep call buyer in DraftKings and that's it. Right? We won't see one lotto weekly bet in DraftKings and that's it. Right? They come in, right? Pretend it's like right now we're in November. They come in, they sweep January, February calls and put $500,000 behind it. Okay? Then tomorrow they come back, they sweep another $500,000 to $1 million of DraftKings call. Then they come back and they add DraftKings again. Then DraftKings starts to move a little bit higher. They come after it and add it again. Right? Now they're playing other online casinos in the sector and they're sweeping them up. You understand? You sense the appetite. You sense the urgency behind the buying. Right? That, like they don't have enough. They can't get their hands on enough quick enough. Like that's the risk on buying that you see when you're in a healthy risk on bull market. You see that appetite, right? You don't see, they come in and buy Apple, they're buying Apple calls and then they're buying Amazon calls and then that's it. And then the buying slows down for a couple of weeks or there's no more buying. And then Apple and Amazon run out of gas and they roll over and the market rolls over. They're looking for new names. And the reason why it's new buying, Alan, it'll be in new setups, right? So it's almost like a stock picking tool for me as well, an idea generator. A lot of times I'll see sweeper activity coming in, accumulating a name, and I never heard of that name, or I don't know what they do, or you know what I mean? And then before you know it, you're starting to put pieces of the puzzle together. They're sweeping. Oh, they sweeping this name. They're sweeping this name today. Oh, they're going after the software names, or they're going after the shippers. You understand? They go after a pack in a sector, and you see the risk appetite. And they come after it aggressively. Like right now. And that's the thing. Like we were talking about it today in the afternoon. I didn't play anything today. What name would I play today? A lot of you guys know, those of you in the Steamroom, what I like to play. Or even in general, the action I like, and I stress to you guys, is aggressive or quality. There was nothing today. The only name I was even thinking about potentially playing, and I said to myself, this is what I'm going to play today, out of all was that BTU, because it caught $100,000 sweep. Can you imagine? That's it. There's nothing to play. They weren't buying anything aggressively today. There was flow out there, obviously, but look at the flow, right? What names caught flow? DraftKings, Apple, Uber, right? Calls and puts. They're all reporting. All the action were in names that are reporting earnings. All of it. So that's the problem with this week, the week prior. Again, that'll start to clear up. But here's the problem. Not that we have no problem. Earnings goes away, right? Going into next week, earnings, the heart of earnings season's done. The problem that we've been facing is that when earnings season is done, they're still not buying much, right? They come in, they'll buy an Amazon, they'll buy a Google. That's it, right? The buying has been so selective. So selective. So that's the main problem, right? That's the main problem. And I think no matter when it is, it may be at lower levels, maybe it's here, maybe we chop around, whatever. When this correction ends, I think it's going to end with aggressive buying in other stuff. I really, truly believe that has to happen for us to head higher. The other stuff has to be bought aggressively. They can't just keep buying Amazon, Nvidia. They can't. They can't. They can, but we're just going to have more of the same, which is kind of a range-bound market that goes up and down and doesn't make much headway. Oh, Apple, what's it doing? Yeah, that's a good call. Let's check on Apple. 171. So coming in a little bit. Are they on the conference call now? Maybe they're talking. You know, and listen, these names, I don't think they have to. I don't think they crash because they don't. They're too good of companies. I just think they're too crowded. You understand? So I can see exactly what they've been doing to continue. You see, right? Kind of just consolidation. Consolidation. We're even seeing it in the semis that were red hot. Right? You had this big move here. It's got to digest that move, and that's kind of what it's been doing here, right? It's not getting killed or anything. Not getting killed. Do I see divergence in assets that doesn't confirm the risk on move squeeze? What I see, I don't know if I would call it divergence, okay? But here in simple English is what I see that's not confirming a bull market. One is the sweeper activity. Okay, I just explained to you why. That's the flow, that's aggressive buying that I watch the tape on a day-to-day basis. You guys know I'm in front of the screen looking at the whole entire flow, right? The lack of aggressive buying definitely is a divergence away from the price action. It does not confirm a bull market, right? And the only other thing I would, I guess, put as a divergence to a bull market is kind of this, what we were talking about here. So this down here. Okay? This is highly correlated to the S&P 500, as you can see. Just the complete opposite. The complete opposite, right? If you inverse the S&P 500, it looks really similar to this. In the past, and keep in mind, most bull markets have been Fed-induced, right? Fed providing liquidity was the reason behind the bull market. Without the Fed taking that approach, they may in the future, but without them doing it now, okay, you're not going to get credit default swaps just rolling over. Okay, because what this measures is the probability of default in the credit markets. Right? The only way that the probability gets washed out completely, where they're not pricing in any default, is if the Fed backs everything. Right? So think of kind of like COVID. When shit hit the fan, okay, credit default swaps blew out. Because now COVID, oh shit, global lockdown, economic lockdown, you're going to have companies going bankrupt all over the place. But then the Fed did what they did, and credit default swaps, crashed to the lowest levels we've ever seen. Now, why would that happen if we're in a global economic shutdown? Right? Wouldn't companies go out of business? Not if they're backed by the Fed. You understand? Because of the Fed and the government actions, the fiscal actions out there, credit default swaps completely washed out any risk of default. Hence, led to a risk-on bull market for a couple of years thanks to the Fed. 2020 and beyond. So if we were in a liquidity-driven bull market here, you would see these credit default swaps completely break down. Instead, we've been seeing the opposite, right? At times, they've been tightening, which kind of signals the opposite. So what this has been signaling, the credit markets have been signaling more of a range-bound market. Okay? So think about Drunken Miller's call for the next 10 years. Net, you really don't go anywhere. But you have like little mini bull markets and bear markets in between. Right? That's not a risk-on bull market. Right? That's a range-bound bull market. So that's kind of what I'm seeing that's not confirming the quote-unquote risk-on that maybe people are seeing. Do I think buying in the other stuff has to be stocks that haven't ran yet or stocks you haven't showed earlier? Yeah, it gets a little tricky the way I explain it. It's not necessarily new. See, in a lot of times when the economy's turning or the Fed is injecting liquidity, you'll see it in new names. So let's take again COVID, right? The rally in 2020, for example. What do we see? What kind of buying did we see coming out of COVID? Hold on, let me pull up that. When the market bottomed, okay, in 2020, and started to rally, everybody didn't believe in the rally, but think about the names we were seeing break out and catch sweeper activity. Zoom, Teladoc, Peloton, Roku. You know what I mean? Just, again, Netflix, you name Shopify, the list, Doku, the list goes on and on and on and on. You know, from large caps you've heard of before to some names you've never heard of before. And then eventually there were IPOs that came out, right? So they're new names. You understand? It wasn't just FANG, right? They weren't just buying FANG post-COVID and that's it. They weren't just buying the Magnificent Seven post-COVID and that's it. There was new leadership, that stay-at-home trade, right? As it was happening, we don't know. You know, now we look back, of course, now we knew it was a stay-at-home trade. But as it was happening, you know, nobody knew what the hell was going on. People are trying to figure out how these stocks are going higher while the market and the economy is locked down. But meanwhile, that was a stay-at-home trend. And think about it, people thought that trend was going to last forever. It was never going back. And after the obvious ones, like a Zoom that people were using or a Peloton, then it went to software names, right? Because they're benefiting from that whole transformation of the stay-at-home. Right, went to tech, Fastly, and all those Twilio, and you understand? Those are bull market characteristics. Twilio, right? Like the list goes on and on, guys. The list goes on and on of how many names, you know, exploded and caught sweeper activity. Net, this guy, right, was a huge winner. Net. Like there's so many. the EV stocks, alternative energy. I can't, right? I can't even think of them all right now. It wasn't like you missed Nvidia and then that's it. You have to chase Nvidia or you never get your hands on the stock ever again. Every day there were new ideas, new flow, new sweeper activity every day, right? The most difficult part about that environment was trying to block out all the negativity and the noise around us of how COVID, we're all going to turn into zombies, Manhattan's completely shut down, there's tumbleweeds going down the streets, right? I mean, it looked like Armageddon. But if you looked at the market and what was going on internally, it was something completely different. Yeah, Shank, that's the bull market, right? That's a bull market. You get away with mistakes a lot. It gets a lot easier in bull markets. You know, every single one of us can make money in a bull market. You don't need to be special, okay? Every single one of us. The only ones who don't are the perma bears who remain bearish in the bull market, right? So it gets easier then to go on, right? Right now, in what we've been in, even though there have been decent rallies within, it's not easy. It's not easy. So that's the difference. You know what I mean? That's the difference. Right. Well, the thing is like you got to be careful because towards the end of that bull market, that's where you really get sloppy and you get screwed, right? But you know what I mean? While you're in it, that's where people have a tendency to get, make mistakes. They get away with it, and then it ends up costing them later in time, right? I mean, there you could get away with murder in a bull market. It's crazy, especially one like in post-COVID. No, C-Long, there's no such thing. Don't make yourself that superstitious. No such thing. In a bull market, you'd make money. You'd make money. Now this market's tricky. This market's tricky. It's really, I'm telling you, it's a tough market. It's a really difficult market. Especially, I think like there is more opportunity if you're playing both sides. But like if you're a newer trader and you're trying to play both sides, it can be really difficult. Really difficult. Like you gotta see what Lucci did. And he'll tell you all how tough it is. He don't lie. You know him. He'll tell you exactly dead straight how tough it is. But like, I don't know if you guys seen what he did yesterday. I think it was yesterday. Okay? Think about this. He was shorting. Okay? He made money on the short side, right? Like any other bear during this correction. He tried to short Nvidia. Okay? Nvidia was weak. And then that trade where he went short Nvidia started to go against him. And he had to take a loss. Now, any one of us probably take our L, pissed off, damn short side, blah, blah, blah. But what he did, by shorting Nvidia, he noticed that sellers were starting to get tired, right? They were exhausted. Nvidia should have broke down. That's why he shorted it. It didn't. And instead of him just getting out of the trade and that's it, he ended up flipping long, even heavier in Nvidia, and then caught the whole squeeze the rest of the day. Now, there may be a few of you that could do that. Okay? Not all of you. That's not easy to do. Yeah, exactly. It's just, again, we're all wired differently. I mean, you can work on something like that, but if you're wired a certain way, I'm convinced no matter how much work you put into it, you may not be able to do it. Because just the way you are emotionally, the way you're wired, the way your mind thinks. You know, to short, be wrong, and then take you being wrong as an extremely bullish signal to size up and get long. Not an easy thing to do. In the heat of the game, and that's what drives people nuts when they're playing both sides. They're going short, they're getting squeezed, they go long. Here comes a flush, right? And you're kind of pulling your hair out of your head. But yeah, this is a tricky market, right? On the long side, what you want is some stability, right? Where at least even if we get a range, right, where things are choppy, you could still make some money in individual names, right? Because not everything is going to be choppy. So that's kind of what you want. But if you're in like a downtrend like this, okay, like here, boom, right? If we're still in a downtrend, for example, okay, the bulk of your long side opportunity is done in the indexes. If you're still in a downtrend, right? So there's not much meat on the bone to eat there. But at the same time, if we can stabilize a little bit, right? Even if we hang around here, like, do whatever, there'll be names while this does this. There'll be individual names in certain sectors that'll see rotation or even laggards that you can make money in on the long side. But that's the trickiness, right? That's the tough part. That's what makes it so hard, this market right now. Eventually, and it could be here, we'll see, but at some point, the lows will hold and we'll start a bullish phase I went off the charts. We'll start a bullish phase for a little bit, and there'll be some long side opportunity there too. We just can't get, we can't fall in love. We can't get too excited, especially if we're not seeing the characteristics we just went over. But don't beat yourself up. This is not an easy market. Not an easy market. Don't let anybody fool you. And anybody who's listen to me, take my word for it. Anybody who's up a huge amount of money, right, pounding their chest, okay, if they're really up that money and not bullshitting you, talk to them in a couple months. See where they're at. You know what I mean? See where they're at. Don't let anybody fool you, okay? Yeah. Well, see, Long, that's why, honestly, my advice to you, and not everybody likes this advice. If you're having issues like that, okay, my recommendations to you is to start with the long side, okay? Start just playing long only. It'll keep you disciplined. Develop the discipline. Then down the line, when you think you're at a spot where you're comfortable on the long side, you want to start dabbling on the short side, then you do that down the line. But in the meantime, as you're trying to figure out yourself and your trading style and system and all that, worry about the long side. Okay? And what you need to do is rely on whatever signals you're looking at, whether it's technicals, sweepers, flow, sentiment, whatever it is, to get you involved when things are looking bullish and there's bullish momentum, and then get you into a cash position when you need to be out of the market. Okay? If even just a long side, you can't be long every day, all day, 365 days a year. You can't. You're not going to make money in this game doing that. Okay? So if you just concentrate on that one side, at least you'll start to learn the disciplined approach, staying in cash, being patient, You work on that stuff, and then you can revisit the short side down the line. It'll still be around. It's not going anywhere. Yeah, it's tough right now where it's going to put your patience and discipline to the test. Okay? But you could still play. Okay? You could still play. Right? Like, ideally, okay, I told you, there's Yaya in the room who's been in there a while, right? Like, even a conservative approach, it's nothing too fancy, okay? When you get these downdrafts, okay, and sentiment or breath or whatever stuff you're looking at, right, gets to an extreme, okay, you look for a long entry, right? You look for a long entry where you know your risk, you manage your risk, and you're looking for a long entry. Okay? Sometimes you're going to be too early. Sometimes you're going to be too late. But if you manage your risk properly, your bankroll properly, you have a shot of making money. You're not going to get rich, but while at the same time, you're keeping yourself occupied, you're keeping yourself entertained, you can make some money, you're working on being patient and disciplined and waiting around for that bull trend, right? So there are always things to do, even if you're long only, if you need to do things. But it takes, right? That's what I'm trying to tell you. It's a good time to work on that patience and that discipline, because without it, I hate to sound corny, you're not going to be around in this game too long. You're not going to. You know? You're not going to want to be around that long. Like for me, right, I'm how long now? 26 years, 27 years that I'm doing this. I wouldn't be in front of the screen still if I didn't work on being patient and disciplined at times. You know, I'd be blown up. Right? I'd be blown up, and I'd probably be so turned off to the market, I'd be doing other shit. So it's a good time. It is a tough market, and if you're new to the game, you're probably saying, shit, what bad timing. But I'll tell you what, and maybe it's just the optimist in me, I think it's the best timing. I really do for you. I think the worst timing would be if you came in post-COVID, like a lot of retail traders, okay? And, oh no, I removed all my indicators again. How do I get it back? How do I get back all the indicators? Reset? No. How do I get back all the indicators, guys? Somebody helped me out the last time I hit a button or something. I didn't have too many on there. I could, fuck, I can't even reset it. Hold on. Control Z, thank you. I did this the last time with you. No, that's the drawings, I think, the indicators. Oh, maybe it's too long now. It was so, oh, thank you, Mark. You're the best. Thank you, Mark. I owe you. I got it. Thank you. I went into panic mode. Oh, shit. I do that all the time when I try to get the drawings off. But no, what I'm saying is, I got on the truth, okay? When I got into the game, call it 98. I actually got into the game 1997, but 1998, okay? And when I got in, okay, before I was a broker, so I had to pass the Series 7, 63, the whole bullshit. While I was doing all that, I'm watching people make money all over the place, okay? Then I get licensed and I start working, I start trading and shit like that. And then as soon as I start to get my beak wet, right? Looking to build a business, all that fun stuff. What happens? 1998, October, the Asian contagion, they called it, okay? Everybody was buying tech stocks before that. Everything got smashed. Smashed. I'm talking about 50, 60% off the highs. Even large cap tech names smashed. Okay? Because of what was going on in Japan. They were calling for a depression, a disaster. As I'm coming into the business, I'm seeing people blow up all around me leaving the business. Okay? All of them leaving. And, I had the same thing. I was like, oh, look at this. As soon as I get in now, it's going to be a shithole? You got to be kidding me. But then, what came after 1998? 99 and 2000 bull run. Okay? And the truth of the story is, even then, the 99-2000 run, okay? Like, I built a business, but nothing, you know what I mean? I was still learning the game, so I didn't really make a lot of money during 99 and 2000. But that was even a blessing in disguise, because when 2000, the NASDAQ bubble blew up, and everyone got blown to smithereens in that, I was one of the few left standing because I didn't have much to lose. I'm still a rookie. And into that blow up, you guys know that those were the best years. I told you, it's the best years of my career. From 2001 on. The small cap bull market and everything else. So the moral of the story is, I think the worst case scenario for you guys, if you're new to the game, if you got in over here or anywhere over here and took advantage of this and thinking that's what the market is, then you're in bad shape now, right? Because if you're playing anywhere like you were playing back here in this market, you probably lost it all and then some. But if you're new to the game and you're just in the, you're just getting in these times, all the discipline, patience, all that good stuff, you're going to carry with you going forward. I know it sounds corny, but that's the way I look at it. A lot of us old timers were looking at like post-COVID 2020 bull market, seeing everybody making all this money in SPACs and AMC and all this shit, and saying to ourselves, oh boy, they're dead. They think it's going to last forever. They think AMC's going to go to the moon. GameStop's going to go to the moon and never come back. All right? Because they don't know. They didn't see a downtrend. So if you're new and you're struggling, trust me, I think it's a blessing in disguise. But it's a good time. You work on what you need to work on, and that's the thing. It's patience and discipline. You have to. You have to. And then you'll see when the bull market comes, a real bull market, and you start to see things work out in a really bullish way, you're still around to pick up the pieces. That's where you make the money. That's where you make the money. Bill already up 20% off the low. Oh, yeah, Bill got smashed, right? Let's see. 64. What was it, 50 the low? My God, what a bath. What a bath. Boob sweat and NFTs. They're still holding the jars of boob sweat. Wondering when they're going to come back. How do you practice patience and discipline outside trading? That I can't help you with. I'm trying to work on that with bowl games too. I've been good this year. But it's still early in the process. And I've been hot in bowl games. Now I'm starting to cool off. And this is where I usually take the needle and bet the whole board. So But I can't help you there. Patience and discipline outside the game. That I can't help you. What's the flow say about the rally today? The flow says that this rally was fugazi. No, it says, honestly, the flow didn't confirm the rally. No. The flow indicated that this rally was short covering and hedge unwind. The boob sweat evaporated in the jar. Who do I like tonight? Steelers or Titan? Again, what I've been doing is trying to take I'm a contrarian at heart. I've been trying to take a contrarian approach and stick to it. Okay, I know you can't win every game in bowl games, right? Just like the market, but even more so in bowl games. Bowl games are ridiculous. But so I've been trying to go against the money in gambling. Okay. And tonight, I didn't see anything. I looked earlier. Let me see. I'll tell you right now. Let's see. NFL. Anybody on any side here? Let's see. By game, NFL. Nah, you got mixed. Pretty even. So I'm probably not going to play this. See, now discipline. If you're disciplined, you don't play this game tonight if you're me. Okay? Now, televised, the only way I'd watch this game is if I had action on it. So I got to stay away from the game. I don't see any early leans yet anywhere else, but it's still only Thursday. It's early. But yeah, so that's been my approach. But I'm starting to cool off a little bit. I had the Raiders on Monday night. Lost my money there. I'm starting to cool off a little bit. Titans plus 3.5. You like Titans got a new quarterback too, who's looking spiffy, right? How would you backtest sweeper activity against historical market moves? It's tough to backtest sweeper activity. You know why? In my opinion, it's like I'm looking at all of sweeper activity, Alan. Any sweep, especially of decent size or multiple sweeps that come in on a day-to-day basis, I'm looking at it. And it's not all of it that catches my interest. So it's a certain batch of sweeper activity that piques my interest. Now, the problem with backtesting that is depending on other things going on, market conditions, at what point in the market, a lot of that has a big influence in it. So I'll give you an example, what I mean by that, okay? And, how do you backtest something like this, okay? If you get clean sweeper activity, right, on the call side, into this pullback, okay, you will see a lot more success in those than you would, late in the rally up here. Does that make sense? So it's hard to pin. There's a human element to it where you can't just, you know what I'm saying? You can't just put statistics on it. Yeah, kind of what I'm saying. Exactly, Alan. Now I'm sure you could, right, if you take certain type of sweeps, but you wouldn't want to, because you want to do your choosing from the cleanest pile of sweeps. That's generally the premise of what you want to do. Okay? If you just have a scanner that just spitting out size sweeper activity, that sweeper activity could mean anything, right? If a guy's closing a position behind it, it's a roll. It's not even a clean bet, right? Or if it's the day of earnings, could be replacing stock. It's not a clean bet. So there are other factors at play. I mean, my advice, and again, it's kind of like selling my own thing, but even if it's not me, there are a few others who do what I do out there. That's where I would start. Pay someone to do that work for you, and then you can start to analyze certain things within it. But for you, like if you have no experience with it, to come in and just start like putting statistics just on sweeps in general and stuff like that, I think it'll be a waste of time. You can learn, but it's going to take time like anything else. You know, you can learn what to look for, but it takes time. It takes time. But some great questions, guys. Great conversation as well. Anybody have anything else? Anything that we usually look at that I didn't show? Unfortunately, names, it's kind of been the problem on this Thursday webinar, but because of earnings season, I really don't have much flow to share with you guys. Just a couple things that I can share. Nat gas names have seen some action. This name reported today, SWN. There's been some buying in this name. Okay, this is a nat gas play. Another name there's been some buying in, RRC. They bought a little bit more today, RRC. Let me get these Niner things off of here so you guys can see it better. There we go. This is actually a good looking stock, RRC. And AR, that's the other one. I don't know why nat gas names have been seeing some flow, but they have. No, SMCI didn't catch any post-earnings action yet, but that's okay. You don't want to see it the day after because it's a bit messy. Ideally, you would like it to see a couple days after. Because you got a lot of the pre-earning stuff that gets rolled. People just trading it off the volatility. So ideally, what you would want is to let it go quiet for a few days, and then boom, see a nice sweep. But yeah, it's amazing how many times we bring up this name. It's a good, right? It's a good example of what I'm talking about. Some of the more interesting names we talk about repeatedly because there's not a lot of them. Anybody know this name? You got quite a few of you I know follow this name. Annette. This has been a really good stock. It does see some nice flow from time to time. And this has the characteristics of what you want to see. Profitable, solid growth, everything you want to see in the name. There are a few others, right? This is Sil. Sil likes this stock in the room. This thing's been a beast. Snaps. But there's not a lot. When did I stop trading full time? What do you mean stop? You mean start or stop? Well, here's how I went. I've been trading basically my whole life, but I was managing money earlier to start in my career in this game. Right? From like 1997 up until was it 2000 and maybe 13? Maybe around then. And then I left the business and solely been trading my own money. Well, kind of trading my own money. And here's another thing, right? Like, I couldn't care less about the YouTube crowd out there. What I do now, right? I have my personal accounts, okay? I got two IRAs I trade. I got an individual account. I do day trades with the equity that I show you guys and talk about, and I'll swing trade equity or calls, right? Mostly options I'm swing trading. But at the same time, I'm doing a lot of shit. Watching Flow all day and talking to you guys is the bulk of it. At the same time, I have an account with a group I work with my whole life. And I used to trade that account. There were two of us who traded that account before I started doing this. Now, I don't trade that account. I still am an account holder. Okay, my money's there. But because I'm tied up with a lot of this other shit, I'm not actively traded in that account. Okay, but I consider it my account, right? My money. So that's kind of what I got going on here, right? I'm trading my money. I'm in the steam room, right? Sharing the activity, talking with you guys all day. And the office I worked at, we have a group of guys, few guys who were in a joint account, and two guys are actually trading that account, but actually off the flow and off my interpretation of the flow. So basically everything I'm telling you guys, everything I'm sharing with you guys, they're feeding off the same shit. They've just been with me a lot longer. I found Lucci on Twitter. I've been on Twitter since 2011. And then I started just talking about flow in the markets. And I forgot how it happened, but Lucci messaged me, whatever. I went down to his Manhattan office, shot the shit. They were cool guys. And we talked about starting something like this up. So that's my story. So that's where I'm at now. At the point of my career where I'm at now, I still trade actively, but I'm not as aggressive with the accounts I'm trading in as I used to be. Not even close. I could be managing billions. I wasn't managing billions. I mean, I was basically mostly speculative assets. I had a decent amount of money under management. I mean, I made a lot of money in that business, but it changed, Post 2008, it just became a shit show. And I didn't want to deal with just everything in general. You guys don't even understand the half of it. Like, you had clients who wanted to buy options, the paperwork you would have to get. Forget it. The compliance issues, So, but I didn't manage any of the conservative money. It was mostly speculative money, and equities, options, that sort of thing. I'm definitely not macro. I mean, I enjoy following the macro, but I'm not a macro guy. I'm not a macro guy. So that's it. That's the story, guys. All right, so we'll see how this shakes out. Again, come for those of you who aren't members. I mean, first of all, if you aren't members, there's a free trial for $8. I mean, that's ridiculous. I think it's 2 weeks too. So anybody who's new, not a member, you want to check it out. Going into next week should be a lot better week, action-wise, cleaner. So you can see what goes on for $8. Again, even if you're not trading my style, Lucci and Ranchero are extremely aggressive. There are many members of the room who are really good traders. They trade a certain style. You could definitely learn some stuff, no doubt. Anyway, there's a free trial there. You go to the wallstreetjesus.com. You could get the link right on there. And otherwise, for those of you who aren't members, we're on in the morning at the open via YouTube. We throw out that link on Twitter. And next Thursday, hopefully, we'll have more to talk about market-wise and individual name-wise. Okay, we'll see. Again, we had Apple. We're past that. We got job numbers tomorrow. If that number comes in hot, maybe we see some selling And that's going to be a nice short-term test, right? If we see, especially if we see sweeper buying into that selling, that likely is telling us at the least we got some stability and a little bullish momentum to play off of for the time being. So that first test that we see is going to tell us a lot about whether this was just short covering and it's over, or it's more of something sustained over a period of a couple weeks, which can easily be the case. Okay, more importantly, next week, in the earnings flow is such a pain in the ass. So next week, it's not going to be drastically better, but we'll have names to talk about. We may not like the names if the buying selective, but there'll be some names to talk about. All right, post-earnings flow is always interesting. I appreciate that, Mark. Everybody, always a pleasure. All right, enjoy the rest of your night. Enjoy the weekend coming up. And I'll see the majority of you tomorrow morning. Okay, take it easy, everybody. Have a good night.